Hi, I'm Jimmy. In this video, we're looking at United Healthcare, ticker symbol UNH. So in this video, we're going to look at the basics of United Healthcare's business. Then we're going to dive into some of their numbers. Then we're going to look at some of the chaos that has happened with this company. This company is down like 50% or something from a few months ago. We're going to look at some of that stuff, and then we're going to try to come up with a fair value for United Healthcare stock to see if it's worth investing in today. Okay, now let's jump in and look at a breakdown of United Healthcare's revenue according to their 2024 numbers. So this is a breakdown of the different segments of business that they have. Their largest United Healthcare segment is their insurance segment. Now, they insure over 50 million people, most of which live in the United States. And this includes plans like the Medicare Advantage plan, Medicaid, their commercial plans that you might get through an employer or something like that. They are the largest health insurance company in the United States. Then we've got their OptumRx business. This represents about 13% of last year's revenue. And OptumRx is essentially the pharmacy benefit management system. So they have essentially their own pharmacy system set up and generated about 13% of revenue. This number is up a decent amount over the past few years. Then they've got Optum Health representing about 10% of revenue. Optum Health it's their own network of like doctors and medical facilities. So you might have things like urgent care in there or different hospitals that United Healthcare themselves own and control. And this part of the revenue, this segment of the revenue generated about 10% of revenue. Then their smallest segment here is Optum Insights. Insights is essentially their data division. So they got it's like 52 million people under the insurance umbrella. They probably have a ton of data on all of these people. How many times do they go to the doctors? All of that stuff. Well, there's some value in that data, so clearly they use it to generate at least some revenue. Okay, now jumping in and look at some of the numbers. Well, let's pull up a chart of United Healthcare's revenue. This is their revenue over the past 10 years, and it's been quite consistent. They have consistently grown their revenue every year for the past decade. Now, when we jump over and look at net income, the story's not quite the same. It was trending up for a while, and then recently, we saw a pretty big pullback. And we can see the exact same thing if we were to look at something like net income margins. Well, we can see the exact same thing. But here's a couple important things to keep in mind here. First of all, in 2024, they had a cyber attack that hit them. That cost them a few $1 billion to deal with that and try to set up, hopefully, so that doesn't happen again. They also sold off a piece of their Brazilian business. They've had a few big one-time hits that drastically impacted their 2024 numbers. But I actually wanted to bring out this chart. The reason I didn't just stick with net income and I wanted to show net income profit margins because this will be important later in the story. But for now, just notice outside of 2024, which again is a bit unusual because they had all these additional expenses come up for 2024. Well, if you look at the broader trend of net income profit margins, just for now, let's just keep in the back of our mind that this number has climbed up. Okay, now let's jump over and look at this is a chart of their stock's performance over the past year. But there's just a couple things I want to point out. First of all, look at how far down this stock is. From its high, it's down about 50%. Year over year, it's down about 40%. But there's been a couple big operational things that have caused problems for them since the start of 2025. And the first big one that really tanked the stock was they missed earnings in Q1. Q1 2025, they announced earnings, and basically they cited higher than expected operating expenses. And because of that, profit got hit, and the stock really tanked because of it. Now, they had also, one thing to keep in mind with that is they had also lowered their forecasted guidance. What was their profit going to be for the year, for the following quarter, things like that. They had reduced those numbers. Wall Street never likes that. Well, fast forward just a little bit. One of their CEOs, this company has a lot of different segments, and therefore they have a lot of different CEOs. Well, one of their CEOs surprisingly stepped down, and he did it immediately. And that Wall Street tends not to like that. The stock market tends not to like that. Well, in addition to that, they also, United Healthcare in general, pulled their guidance, said we're no longer, where they had reduced their guidance before, they now say we're no longer giving any guidance about, future revenue, future profit, things like that, at least for the time being. Well, again, the stock pulled back. To see this in kind of a timeline format, let's jump over and look at some of the key events. And then we're going to jump in and look at some of the fair value after we go over some, I think, are very important things about this company. So clearly, the company stepped up, reported their earnings, stock dropped 22%. That was a big deal. Then one of their CEOs, he jumps in and he says, you know what, I'm no longer, I'm stepping down fairly immediately. And the stock dropped 16%. And then I think that where it starts to get a little bit more interesting is, the Department of Justice jumped in and said that they were investigating them, UnitedHealthcare, over alleged kickbacks that they were paying. Call it bribes. They call it commissions, but bribes, kickbacks. Essentially, they were paying brokers extra money to have people sign up for them. Now, if we're curious from an insurance company's perspective, if you work at a company, well, that company might offer health insurance. And if they do, many times those companies will go through brokerage firms that will offer insurance. Well, imagine those brokerage firms were getting kickbacks to give you this plan, even though maybe that plan wasn't the best plan. Maybe it wasn't, the best cost, the best bang for the buck, let's call it. If they had some personal incentive to give you this plan, even though it might have been an inferior plan, well, that's kind of what the Department of Justice is accusing and what they're investigating. Now, I will say UnitedHealthcare has come back, as we might expect, and said, none of that is true. That's not happening. Or nothing outside of the normal, what you're allowed to do, because a lot of these guys do work on commissions. But there's rules, there's guidelines as to how much you can give them from a commission standpoint. Department of Justice is looking to see, was UnitedHealthcare giving them too much? UnitedHealthcare says, no, we were giving them what we were supposed to. Then, similar, not too far after this company has been hit by a slew of bad news. Well, here, the Guardian put out like an expose explaining that now, while they didn't name UnitedHealthcare explicitly, it was implied in the whole article if you read the article. But essentially, they were saying that UnitedHealthcare was paying nursing homes. So let's say elderly care facilities. They were giving them bonuses, if you want to call it, bribes, essentially bribes to not send people to the hospital. Now, from what I did some research in this, and from what I could find, there was one instance where the accusation is this gentleman passed away because he took too long to get to the hospital. And I'm not talking a couple hours. I'm talking, from what I read, it was like 11 days or something. Now, none of that has been substantiated. We don't know. We'll see where all this shakes out. But from a, business perspective, this probably isn't a great sign as to the type of business or exactly how UnitedHealthcare seems to be running their business. Now, here's my biggest concern with this kind of bad news. Outside of the fact that maybe this tells us that it's not a great company, they're morally a bad company and all of that. Maybe that's the case. And each of us are looking at that, with our own critical eye. But just looking at this fundamentally as a investor, trying to stay objective about this, my biggest concern with this list right here, for now, is this third bullet point down. The idea of brokers getting too many bribes, too many commissions, the idea of these guys getting too many. Well, I think that this has a potential effect or potential ripple effect that could hurt their business. Let's pretend they weren't doing that, right? Let's imagine they weren't actually doing additional kickbacks. Well, if you're one of these insurance brokers and a company comes to you and says, hey, give us, I got 10,000 employees, we need health insurance. Well, you might have read these articles. You might be concerned that people are going to call you. Well, maybe this brokerage firm has been fielding a bunch of calls about whether or not, they were getting kickbacks or something like that. Well, the most logical thing for me to do if I'm that brokerage firm, wouldn't it make sense to say, well, you know what, let's just not recommend UnitedHealthcare products. Let's just, we got a good Aetna product over here. We'll just offer that instead. And even if they were about pound for pound, the same type of insurance, same coverage, all that stuff, Why don't we just offer that? So we can't even pretend to be accused of, improper activity. My point is that from a business perspective, this has the potential to introduce some, let's call it growth headwinds if brokers become, hesitant to recommend their products. Never mind the fact that if they were actually doing it, well, that will cause a whole different set of problems. Either way, I could see this whole situation leading to potential headwinds, let's say, for future growth. Okay, now we're going to jump in and look at a different set of headlines that I think introduces a different set of problems. So the gist of all of these headlines are that different hospital networks, different medical networks, so maybe a group of doctors, group of hospitals, things like that. Well, these different medical networks have either threatened to leave. In some cases, they have left. Now, in some of these instances, they did end up cutting a deal with UnitedHealthcare and didn't end up leaving the network. By leaving the network, basically, imagine there's a hospital or a group of hospitals or group of doctors' offices, and if you have UnitedHealthcare, well, this hospital or group of hospitals is in network. Well, if they leave the network, you then become out of network. So basically, if you have a choice to go to a doctor and you want to make sure that doctor's in network, if you want a lot of it to be covered, if they leave the network, well, then what do you do? Now, one of the issues here is that many elderly people grow a certain relationship. They have a certain connection with their doctors. They like the doctors that they have in many cases. So it is possible that if this hospital network or doctor network were to leave UnitedHealthcare and they now become a out-of-network doctor's office, well, who's to say during the next enrollment period that these people that maybe are on Medicare Advantage plans, these elderly people that want to stick with their doctor, understandably want to stick with their doctor, well, during the next enrollment plan, they just changed their insurance plan. If that's the case, that is directly a loss of revenue to UnitedHealthcare. And I do think that that is something to keep in the back of our mind, that between the brokerage firms, the potential issues there, and the idea now that hospitals are kind of standing up to UnitedHealthcare, I think rightfully so, are now standing up to UnitedHealthcare. Well, that has the potential to be a serious problem over the long run. Okay, now, to take it one step further, I think to answer one question, at least that I had, is, well, why are these hospitals leaving? And this is just one example of one article that I found. And there were all different ones, and the numbers varied pretty wildly from source to source. So keep that in the back of our mind. But I think the important point here is that they claim that not only did UnitedHealthcare take longer to pay them, but they said that the denial rate for UnitedHealthcare was, in this particular instance, was 10 times higher than all the other insurance companies that they deal with. So I think that's real important, because this isn't just a hospital saying insurance companies don't like to pay us. This is as a hospital saying all those insurance companies pay us. They deny us 10 times more than everybody else. Now, I have seen numbers ranging from 2 to 3 times to 10 times, but almost universally, it has been stated that in the past year or two, that's where most of the articles that I read were saying, in the past year or two, UnitedHealthcare is significantly worse than all the other health insurance companies out there. Now, again, I'm bringing this up purely from the standpoint of, if that is true and hospitals start leaving, this will hurt their business. And when I dug a bit more into these numbers, my question was, well, out of all the claims submitted in, let's say, a day or a month or a week or whatever it is from the insurance company, from the hospital, how much does the insurance company deny? Do they deny 10 out of 1,000, or what is it? Well, much to my surprise, it turned out that the numbers, again, they ranged, but we're talking somewhere between 20 and 30% from the examples that I've seen, from the surveys that have been done, from some of the legal filings that some of these companies have filed, some of these hospital networks have filed against UnitedHealthcare, saying that you're talking 20, 25, 30% denial rates. That would be 300 out of every 1,000 claims get denied. And I began to wonder from a business perspective, have they always been like this? Is this something that the industry's just always tolerated? Or is this something kind of a newer phenomenon? Has the company gotten more and more greedy as years have gone on, and they've just realized that you could just deny most things, and if anything, hold on to that capital a little bit longer before you eventually have to pay it out? Well, I went back to about a decade, a little bit more, 15 years ago, and I found this article from 2009 where there were different surveys done. And interestingly, at that time, United Healthcare I've read 3 or 4 different articles. This is just one example. But this one, they say that the denial rate was 2 point something percent, 2.7%, I believe it was. And so less than 3%. And they said United Healthcare had the best denial rate, that it denied less, that United Healthcare was supposed to be one of the stronger businesses as far as the health insurance companies in the United States. They were one of the best to work with. Well, now in my mind, that brings us back over to this chart. Now, with all of that in the back of our mind, I find it interesting that you have a company like United Healthcare. And over the past decade, this is a 10-year chart. Again, we're ignoring the most recent one, the most recent year, because of the one-off items and the higher operating expenses and all that stuff. But the trend of this was in fact moving higher. Now, to give this another comparison point, well, what if we were to overlay Humana's net income profit margins? So this is their net income profit margins. Now, of course, United Healthcare has some economies of scale that this company doesn't have. But the big thing that I noticed is, one, Humana, a company like Humana, has never had, another insurance company, has never had profit margins as good. But also, theirs were trending down, specifically coming out of COVID. Theirs were trending lower, while United Healthcare's were trending higher. And knowing what we know now about the fundamentals of their business and how they've drastically increased, even if we don't know exactly what the numbers are, as far as denial rates go, we know that they've gone up a lot than they were a long time ago. When they built themselves into this behemoth of a health insurance company, well, a lot has changed since then. And because of that, their profit margins were better than everybody else's. But now they're starting to feel the pressure, and the stock got whiplash because of it. Now, with that in the back of our mind, I think that it makes sense to jump over and look at the fair value of this stock. So first, let's jump in and look at the price to earnings multiple. These charts are from the Investors Grow website. Leave a link in the description below if you want to sign up to get access to that. Try to make it quicker and easier to value companies. But basically, compared to the industry average and compared to the company's own 20-year average. So the 20-year average, the different averages are the horizontal lines. The orange line here is the industry average. The blue line is what we're seeing is their PE multiple. Right now, the stock's trading at about $230 per share. Now, if we were to move over to, let's say, forward price to earnings multiples, which instead of looking at last year's earnings per share, looks at the next 12 months of earnings per share, well, here, again, the stock looks undervalued. When we compare it to just its own 20-year average, well, this $230 stock, it looks like there's about 35% upside. That's what the parentheses, that's what that number means. There's about 35% upside. Now, what about discounted free cash flow? So here's the thing. Analysts, the green bars here, have free cash flow pulling back, which it has done, and then ramping back up within a couple of years. Now, the assumption here, I've read a lot of these analyst reports, and the assumption here is that they will return to business as normal. And there is, some of the bad news that they've run into is temporary. Maybe there will be some government fines and all that stuff down the line, and that might be the case. But my bigger concern is that from my research, I fear that the company may, although I certainly don't think they're going to fall apart because they're just so big. But I do think that if hospitals and all those different health networks are willing to leave, that could put pressure on their margins. Margins might come down. Well, if that were to happen, and then there's also pressure on the brokerage side, that could slow their growth. So where they were expecting, they got fairly consistent with increasing things, and analysts have it somewhat returning to that. I hesitate as to whether or not it'll pick up that much speed. So for me, to come up with a fair value, I've actually opted to go a bit more conservative from a discounted cash flow perspective. Instead of going out 5 years, using all 5 years of analyst estimates that we have, I'm just going to use the first 3 years. Then the assumption is this company will grow at about the rate of inflation. So I have it set to about 2.5% growth after this. Now, those are without a doubt more conservative. And that actually gives us a fair value, again, from the Investors Grow website, gives us a fair value of about $465 per share. You can see the current price as of the recording of this video, and the stock has a decent amount of upside. But this brings us to the question, at least for me on a personal basis, is this a company worth investing in today? Now, if I already own this stock, I'd probably just sit and hold it. If I already owned it, I would probably just sit and wait. I do think it is undoubtedly of value. I mean, from a purely the investor in me thinks that this is it's a good value opportunity. My bigger question is around timing. I don't know how long this bad news will last for them. How long, how many hospitals actually leave the network before they start to, shift the way that they're doing business. All of my research indicates that this is a company that for a long time was the premium company in the industry, and they were the horse everybody was trying to catch. And it seems like they lost their way. It seems like they frankly got a bit greedy and took the easier way. It's easier just to deny everybody and then, fight it out from there. But the problem is that you're messing with a lot of people's health. And as the baby boomer population ages, I think that this could potentially be this Hertz reputation could hurt them for a while. And when I'm looking at potential investments, I think I'm better off, frankly, if I'm looking at an insurance company, I'd rather go to a property and casualty insurance than a health insurance company. Who knows what's going to happen with the government and all the U.S. the way the government's changing? There's a lot happening right now. I don't know if anybody's been paying attention to the government right now, but there's a lot changing. Who knows how health insurance is going to shake out? But if you go to a more of a broader property casualty insurance, like the type that Buffett's heavily involved in, those types seem like a better, safer consideration than this company. So where I do think UnitedHealthcare looks like a amazing value. And again, if I own this stock, I'd probably just sit and hold it. But for me, I'm going to sit in the sidelines. I'd rather find a different opportunity. There's too many things that smell wrong with this stock, and it bothers me. So again, that's me on a personal basis, but let me know what you think in the comments below. And if you'd like to sign up to get access to the Investors Grow website, try to make it quicker and easier to value companies, analyze companies, things like that, I'll leave a link right here, link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.